Hi, and welcome again to another edition of Market Analysis for today, July 28th of 2025. I'm Gio Benacourt, and this is a recording done by Vantage Markets right about half an hour, actually 25 minutes prior to the U.S. session open. Well, better the devil you know seems to be the current market motto. President Trump's trade deal with the European Union will relieve some of the uncertainty about the global economy, but there are more hazards to negotiating a big week for investors. So the EU deal cements a 15% as the baseline tariff for imported goods to the US, broadly the same as the agreement with Japan. Now that leaves China as a big trade question to be resolved, with talks taking place between Beijing and Washington officials this week. So a grand bargain could be coming. So a clear road ahead for the market rally? Not quite. Tariffs still act as a tax on consumers, at least according to classical economic theory. Setting the rate is one thing, dealing with the results is another. So insurance tariffs don't cause an inflationary spiral is the Fed's job, but the central bank meeting this week is unlikely to clear up anything. It's odds on that rates will remain unchanged and attention will turn to inflation and jobs data due out Thursday and Friday. So we have the decision from the Fed on Wednesday. We have unemployment on Thursday and the non-farm payrolls on Friday. So that's going to be a very volatile day for the markets, because at the same given time, that's when the August 1st deadline for trade deals to be done before higher tariffs kick in. So there's a chance of a shock at the end of the week. But before then, earnings reports will provide a window onto the economy. Big Tech will grab the headlines with Microsoft, Meta, Amazon, and Apple all updating. But it's worth watching what the likes of consumer goods manufacturer Procter & Gamble and payments processor Visa say about import taxes and whether they are affecting household spending. So since the lows of April, stocks have been rebounding in a bet that tariffs won't be as bad as feared. Now the market finally knows what the devil it's dealing with. It just needs to figure out how to handle the consequences. And with that being said, taking a look at this daily candlestick chart of the NASDAQ, we see how broadly it opened gap up, making an all-time high, new all-time high per se. So I'm going to use that all-time high, the new all-time high, which is 23,583, as well. I'm going to use 23,585, which is basically where I have my line. So we know that that's a high, and from that above that is right above the psychological value of 23,600. So that's just from here. It's just basically that. So I'm going to use Friday swing high as my first level of support, and then Friday's open as my second level of support. So let's see if the market if this is profit taking, as the market closes that gap, rebounds off our level of support, and continues its uptrend trajectory. So that's what it is speculated to be done today. Then we have here our S&P also making gap up, new all-time highs. So 6460. Pretty tight range. I'm gonna use again the high 6430. So I'm gonna tie that one up to 6430 actually, which is basically right there. 6430. I'm gonna use that as my first level of support, and then as my second level of support, I'm gonna use the previous day swing high and see if that will, because it's just too tight to use the Friday's open. So let's see how high or how much of a retracement we'll see. The Dow also opening up, it got up. I mean, that news was, that deal was good, obviously positive for the market. That's what we see in this movement to the upside. Since we already basically have closed that gap, I'm just gonna trying to find 45,000 and then Friday swing low for the Dow. Again, continue the trajectory to the upside. Well, crude oil sure says, okay, well, if you're in the up and In the bull market rally, well, I'm going to join you and also make a substantial move to the upside. I mean, obviously, this puts pressure on the NASDAQ, but let's see how much higher will this parabolic movement mean for crude oil. So, as support 65, let's just use 65 to the first level, and then the lower Bollinger Band, because it's got to retrace all of this and also cross the 20 and the 50 moving averages if it's going to do a deeper pullback or retracement. Then we have Nat Gas. Ooh, Nat Gas is also looking to make a nice little move to the up. Even though it opened gap down, it has been closed. But let's see. So far, being bullish across the assets that we've seen. Gold open gap down, has been closed, right? It has been closed. It's retracing. So let's see how much more of a retracement are we going to be seeing in gold. 3,300, 3,300. I'm going to use a 20-day moving average as my first level of resistance, and then 3,360 as my second. So let's see if gold will first initially find support at the 50 moving average, which is just below it, and from here reverse and continue to move to the upside. The dollar index has also spiked, so that's probably also why. Then we have here silver, which also up and gap down, has been closed. Just use this 20-day moving average. Then 37.50. I'm going to use 38.5 and then 39. Yep, 39. So let's see if the metals will recover today or will they continue to slide. So copper is within the range that we placed on Friday. It wasn't really touched. I'm going to leave the same levels. Profit taken, even though it has taken 1 to 3 days for the market to retrace or pull back on what it did on Wednesday. That's Wednesday. So the range from Wednesday hasn't been really been revisited to the downside. So let's see what will happen. Bitcoin. So Bitcoin is in rally mode again. When it moves by thousands. So let's use 120,000, 122 basically, which is where the upper Bollinger Band is. Let's use to support 116,000 and then 114,000 around that level. So let's see if Bitcoin is ready, set to make a new all-time high as well. So 150,000 for Bitcoin. Let's see if it's possible. Oh wow! So after that deal, the euro took a plunge. Actually, they needed to make more of a one-to-one scenario between the dollar and the euro after that trade deal, which makes sense. It will make things economical and for people from here to buy American goods, because if you have a one-to-one ratio, then it's different. But obviously, the advantage right now is that for €1 you get 117. So dollars. So it's 117. So let's see if we'll see something in here. So now this strong fluctuation initially, since we opened basically gap up and it was closed. So we are going to use today's swing high. This is going to be one of those days that most likely won't recover. All of this move to the downside, and it probably will continue to the downside towards the 116. But I need to give that range. Then the pound. So we have the pound also opening gap down. It's been closed. So I'm going to leave the same levels that we have since last week. Let's see if it does a nice rebound. It'll do the pound. So here we have the dollar index making a strong move to the upside. So let's just wind this range. Use the 50-day moving average and then the swing low from Friday as level of support. $98 98 seems to be have the value where the dollar just found some resistance. It touched it. It was rejected. So we're pulling back now. All right, that's it for today. Have a great trading day. I'll see you tomorrow.